I think it's been great to see the company go from the first problem that we solved for sellers was how to take a payment. And that's evolved into a pretty complex managed payment solution. They slowly pulled us up into becoming a point of sale solution for them, and what I really think of as a commerce platform. And then you're right, we started to build new products on top that really play to our unique advantages. So a product like Square Capital plays to the fact that we have access to data that allows us to really manage risk. And so that's just one part of the cohort of products that, as you said, now comprise a quarter of our adjusted revenue. So lots more to do there. I think we can continue to grow the core. I think we'll continue to move up market. We're starting to shift from offline into online through our platform. And then, of course, we can take all of that and go global. So a lot of white space in front of us, and exciting to see how that will drive our growth.
I think investors are pretty excited about those newer lines of business and that white space that show potentially more profitability. And we saw a huge jump in EBITDA margin from -6% last year to 16%.
Yeah.
How much higher can that number grow, and where would most of that increase in profitability come from?
Right. So we want to be mindful of both growing the business, but also doing it in a way that continues to expand margins. And I think we've been clear that we think about a mid-single-digit margin expansion pace is good from here. And I think that's the right balance of being able to take back into the business the other profits that we're throwing off and invest them back in for growth. In terms of where that margin expansion will come from, one will just be top-line outperformance. So just like this quarter where we beat top end of guidance by $7 million, that clearly impacts profitability. But beyond that, we want to get more efficient in our operating line expenses. I think in particular areas like G&A. Clearly, we did a big build as we went public, and now we're reaping the benefits of that, but we don't need to keep building at that same pace. Jack talked a lot on the call yesterday about automation. Automation is important for our sellers, and we want to put that into the products that they use, but it's very important internally too to utilize automation to make ourselves more efficient. Examples would be using machine learning in risk, or using machine learning or AI in areas like support and sales. So lots of opportunity there, and I think that will continue to help grow the margin profile.
You mentioned global expansion earlier as a key point. You're currently in Japan, Australia, US, and Canada, but it's still largely domestic business. The vast majority of revenue comes from the US. So what can we expect the pace of global expansion to look like?
So I think for us, there has been just huge opportunity here in the US. When you're a business that goes after commerce, following GDP is clearly a good route to take. That said, I think a huge stride forward for Square in 2016, or it actually happened right at the end of 2015, was getting our hardware platform to a point where we could globally accept payments. And what I mean by that is being able to take both chip and contactless transactions. The US has been effectively the slow country in making that transition. So we didn't have to have it here in order to be able to take electronic payments. But now that we've shifted over to a world of chip and hence EMV, and I think more importantly, getting the US into using contactless, we've now created hardware that really unlocks the rest of the world. And my hope is that will help us move faster now.